Hello traders, it's Samurai Trader here. Welcome to this video, day trading the currency futures markets. Not a day goes past that I don't receive an email or a call from a member that asks me about the major differences or the differences between trading currency futures markets and the spot FX market itself. So I just wanted to run through a couple of differences. We'll also look at some charts and some setups and a couple of recommendations on perhaps the best way to trade the currency futures markets. Now, as we get underway, as always, we do need to put up the understanding the risk disclaimer. If you haven't read one of my disclaimers for a period of time, please pause the video and read the disclaimer. There is of course a risk in trading. Also, if you haven't subscribed to my channel, or if perhaps you've just Googled or gone on YouTube looking for a video on currency futures trading, please subscribe to my channel and you'll be kept up to date. I've got over 300 public videos available now and well over 300 training videos for members, so there's quite a few, so you can subscribe to receive the video ones. Also, please visit my website and request my free day trading ebook, The Truth About Day Trading. Let me get this right, and I should have mentioned, traders, as always with my videos, always raw, real and unedited. I don't run to a script, so you'll have to forgive me if I fluff up anywhere. And of course I've got another free training manual that you can go to my website and obtain. Even more importantly, why not become a member? For $197 you get everything. There is no upsell except for my live training room, which is only $97 a month, 3 hours a day, 4 days a week, 8 a.m. Eastern Standard to 11 a.m. Eastern Standard, where I teach traders how to trade my setups in a live market. So let's get into this. So let's get straight to it. Here we go. So first of all, a couple of things I want to point out on my website. So this is not only for the general public but for members. I need to show my members a couple of things which are very important here. First of all, I do have a cheat sheet, and this is part of it. Now you'll see here on the cheat sheet we've got there the, where is it here, the currencies. Now there are some changes. For an example, the Euro FX there on the cheat sheet that I've got, and let me show you where it is, by the way. So just simply go to the file, the folder cheat sheets, and you'll see it there. So it's in the folder cheat sheets. A couple of other things while we're here I must show you. I am going to be talking about the rule of two. I love the rule of two on range charts, particularly on the forex markets, and you will find a downloadable copy of the PowerPoint on the rule of two, and this is just taking a little time to load here on their very comprehensive, when it is taking its time, here we are, PowerPoint on trading the rule of two. So this is very important for members, that you go to that folder which is strategy PowerPoints. And I think we have one more I want to refer to, and that is where is it here, new member downloads. Now in new member downloads I've uploaded a new video, a new set of videos I should say, or a copy of recordings. So this is kindly, a lot of work was put into this by one of our members, and what they did was they went through all of my videos, and as I mentioned, there's well over 300. And if you look at that master list which you can download, there's a master of all the videos, but then the ones with strategies, general, YouTube's, webinars, live trading, day trading, Q&A, CL, NQES, YM and Forex. So you'll find now all of my videos, and as you know there's hundreds of them now, in a easy reference spreadsheet. And sorry, there is one more thing I did have to refer to, and that is there is under, where is it, which file is it in, under cheat sheets, here we are, trading strategies. Here we are under the section trading strategies. Now for new members specifically, you should be coming to this for all the videos here. Sorry, if you're not a member, please hold, we'll be into the strategies in a moment. There is all the links here are available, so you can go there, but there is also an upload there on the rule of two, the video on the rule of two, because I'm going to be mentioning the rule of two. So there is the video. So I just wanted to point that out. Now back to the general slide here. Okay, so on the currencies, please note the Euro FX and the yen, for an example, showing 12.50. That's now been halved to $6.25 per tick. So there are some changes. So all of these here except for the US dollar index are all futures contracts put out and managed by the CME, and that's very important as we're going to discuss. And let's just go back, so I don't want to distract you for a moment. I just want to point out some major differences. So first of all, what are the differences? So if you look at the spot FX market, the liquidity of that is over 5 trillion a day, where the combined futures markets is less than $30 billion a day. If we look at the Forex market, it's a 24-hour a day, 5-day a week market, where the futures contracts market, for futures contracts as managed by the CME, it's a 23.5-hour day. Another big thing here is that most brokers will tell you that they don't have a commission. That is, they don't charge a commission. Instead, they take a best offer bid and best offer from their interbank counterparts, then they add a couple of pips. However, that's where it's really important you understand this, is that when you're trading futures contracts, basically across the board now, you're paying well under $5 in commissions, and down as low as about $3.50 round turn. Where if you're trading a standard lot, and a standard lot for most standard lots, it's around say $10 a tick, and your commissions are going to be anywhere, or the spread's going to be anywhere between 2 and 3 ticks. Now that is $20 to $30, and in a lot of work we've done, what we've shown is that on average you're paying 16%. If you're a scalper, 16% of your revenues are going in commissions, where it's less than 4% if you're a scalper on standard trading futures contracts. So there's a massive difference that you need to look at, but there's also some disadvantages. For an example, internationally you can gain up to leverage up to around 200 to 1, but there's of course a maximum rule of 2% risk, which we'll look at the slide in a moment. You also, if you're trading Forex, you can start off with under $1,000, whereas we're about to see if you're trading a futures contract, you really need to have $3,500 to $4,000. So there's no denying it, trading futures, currency futures, is more expensive, especially well, really only in the terms of initial capital required. But there's another major point here, and this is getting better, but there is a major point. That is what we call market integrity. The CME is regulated by the US government and the CFTC. So the integrity and openness are critical elements of the CME markets. We've seen massive issues with brokers running stops, all sorts of skullduggery and things happening. Now it's becoming more transparent. The regulators have been coming down on the Forex brokers. We've seen, of course, that FXCM recently lost their license for dealing in the US market. The US market and the Australian market are two of the most regulated, and even the UK is really catching up now, the most regulated markets in the world. So it's really important that you open your accounts with brokers really in the UK, the USA, or down under with ASIC regulated brokers. That is very important. So it's just some major differences I really wanted to put up. Now you also really want to be dealing with a broker that's a pure ECN, straight through processing. That is very important, because if you're dealing with a broker with straight through processing, then of course it's a non-dealing desk broker, or at least if you're dealing with a standard lot. So this is very important. I really should bring this up, and let me show you this straight away. So what I want to show you here is, and a lot of traders are unaware of how this actually works. If you're dealing with a Forex broker, they have what they call the A book and the B book. Now the B book is for all the traders that are dealing with either micro or mini lots, because they can't put them through to the banks or through to a prime broker. And the reason being, because you're looking at 10 cents and $1 a pip, they've got to go through in blocks. So what most brokers will do, they will manage and take the risk of all of their clients that are trading mini and micro lots. Why? Because the majority lose their money. That's quite frankly why. So they run this B book. So if you're trading standard lots, so with a standard lot, they will then put it through to a prime broker straight through to end liquidity providers. But that's very, very important that you understand that, because it comes down to openness and fairness. Because when you're dealing with a CME, dealing with the CME, you're dealing with straight through processing, you're dealing straight with the broker itself. They can't run stops, etc. It's the most, it really truly is the most fairest market in the world. So I know I might have gone on a little bit about that, but it's just very, very important that you fully understand that. So back to this. So before we look at the charts, a few important things here is that if we look at liquidity wise, and today is Monday the 21st of August 2017, so let's just go back to last Friday. So Friday itself, we saw the volume on the euro currency futures contracts 163,000 in the 23.5 hours. On the yen, there was 213,000 contracts. Now, as a comparison to say the ES, it was 2,181,000 contracts traded, the NQ 442,000, gold 379,000, and CL, the black gold, 719,000. So it's right at the lower end. However, 163 to 213,000 contracts is still a healthy range. Okay, and if you're trading 1 to 10 lots, you might get 1 or 2 tick slippage or pips, whatever you want to call it, when you're trading the currency futures, but it's minimal. And so it's a great market. Now also, if you're say based in let's just say New York, the market opens Sunday evening and you get home from work, say it's 7 p.m. 8 p.m. you're able to do some trading of an evening, because that's the peak time that you're going to see a lot of these markets trading. So say if you're on the West Coast, you get home from work at 5 p.m. you can be day trading when you get home. So there's some really good advantages for consideration of these markets. Besides that, as we're about to see, you get some fantastic trends, so they trend really well. So on TradeStation, the ticker code is EC, and for the euro, the yen is JY. On the, let's see, what is it, NinjaTrader, sorry, 6E and 6J. Now let's talk about account sizes, and this is where dealing direct with the spot market has a major advantage over currency futures, because you really need to have at least $3,500 to stay within the 2% maximum rule. Because let's look at it this way. Say if you're trading in a 4 range, which we'll look at in a moment, and you've got a 10 tick stop, that's $62.50. Put on, let's just say $5 commission. Say you get a tick slippage, your risk is $70. So 2% of that, you require a $3,500 account. This is very, very important, and trade has been undercapitalized, and I have thousands of members around the world now that I deal with. Is that it's one of the most common mistakes. It's very, very important. So what if you only have $1,000? Start with Forex and build your account, then move to futures. Because the commissions are much, much lower. It is a fairer market, and it's a whole lot of other reasons. So get in with maybe 1,000, with 500, and yes, you're not going to make much money, only making 20, 40, 50 pips a day. However, it's a great learning experience for you, a great spot to actually start with. So what sort of chart types do I like in trading the currency futures? Well, of course, you've got time-based charts. Well, hands down, you want to go for tick or range, hands down. And I won't go into why in this video, but really tick and range is, we're going to look at both in a moment. You got Renko, you got lots of other types of charts, but I really like the tick and range. Now what about stops on a 4 range? And I love the 4 range on the euro futures and also on the yen, and my target is a minimum of 12 plus ticks. Okay, so you're looking at 62.50 on average. Now I've already mentioned here the cheat sheet where you can look up the different types of currency contracts that are offered by the CME, and so a couple of these are slightly outdated, as I mentioned. They roll over every quarter. So anyway, members, you can go to the downloads, the cheat sheets, and you'll be able to download this, and it's a lot more extensive. There's more that are on this sheet than what I've just shown you here. I've already explained a couple of major issues. There are a couple of things on the Forex. What else we got here? Okay, now we're about to look at the charts, and just one point I really wanted to make here: we need to know if the bulls or bears are in control, and we do this with our EMAs. Now for the newer traders watching my video, yes, we will use indicators are tools. Of course, indicators, virtually every indicator is a derivative of price, which means they're lagging. Now you can trade pure price action. For an example, if you're trading what we call the T25, which is a 2 to 5 candle retracement, the old floor trader strategy, that is pure price action. You don't have to refer to the indicators that you'll see at the bottom of my chart, but they can be very useful with some of our strategies. Now what is critical to me, the absolute critical ones, are our EMAs, because that's going to tell us whether the bulls or bears are in control, or whether they're all in neutral, and what direction we should be trading in. So let's now go and have a look at the charts. So I'm going to give you a couple of options here and a couple of things for you to really think about. Now I really should have mentioned to really have a notebook handy, because some of the important things I'm about to cover you might like to actually jot down. Now first of all, it is 5:52 p.m. In my part of the world now. So the market opened up, what time was it this morning? I think it was 9 a.m. Australian time. So it's now 5:52, as I mentioned, p.m. So if we look, there's a slight gap down. Now what we're looking at here, sorry, is an 89 tick. This is the yen we're looking at. This is the yen, so we're looking at an 89 tick. Now if we look at then the price action across the day, there's been lots of great trends, and this is what we're really after as traders. I'm a momentum trader. I want to see a trading range. Now of course I'll refer to my anchor chart to confirm this, but this is what we call the sweet spot trading. This is where you make all your day's profits just in one of these moves. Now just as a general guide, by the way, just under 40,000 contracts have traded since this morning. So there's been plenty of volume for a 1 to 10 contract trader, plenty of volume during that time. And so what we've seen with the 89 tick, we've seen a T33, we've seen some nice divergence trades, we've seen an 89B, you've seen a nice T7, a nice double bottom, our classic double bottom with divergence. You've got let's see, 200 bounce. Now this is the area you want to stay out of, and just for non-members, these are the areas that we really want to be cautious of. When we see all of our EMAs converging, we want to stay out of these areas and wait for a breakout. Now one of the ways we can do that, of course, is looking for a fractal break. Whoops, it's not plotting now. I won't worry about that right now. So we're looking generally for a fractal breakout, and there are there's lots of training on that. We've got here our classic 34B, classic divergence trading, again nice T3. So just lots of great trading opportunities during this time. And just for the trend traders, and until you're consistently profitable, stick with trading with the trend. There's just plenty of trades. Now what I do want to show you now is the range chart. So this is the open, so we are looking at a 4 range here. I really like the 4 range charts, particularly during faster moving markets. So we can see here it's been very slow in comparison to the 89. Now if it's too slow and you want a smoother chart, drop it down to maybe a 2 or 3 range chart, but 4 is sort of optimum, I tend to find. But what I do love, traders, and this is specifically for members, is rule of 2 on range charts. Here is, you've got a rule of 2 here, you've got a rule of 2. Well, we're in congestion actually here, so we probably wouldn't have taken that, but here you've got a rule of 2, you've got a rule of 2, you've got a rule of 2 again. You had a rule of 2 at the open. So there's lots of really good rule of 2. So remember, there's a recording there, there's a very comprehensive PowerPoint, and I've done a lot of training for members on the rule of 2. So this is our 4 range, and it works really well. Now this is during the Globex session. Now during the main market hours, you can see here it trends, or these markets trend really well. So once again, this is a 4 range. So these are just some great moves. Even though you don't have massive liquidity, there's plenty for the 1 to 10 contract traders. Let's now go and have a look at the euro. So what we're looking at here with the euro, and let me just change this one. I'll change it in a moment. So this is the market open once again here. So there hasn't been a lot of price action on the 4 range thus far. We'll really see this pick up as we head in towards the London session, which is in another 5 minutes. We'll start to see the liquidity pick up as the London market opens, but during the normal London and New York hours, there's plenty of volume. This is what we really want. There are a couple of things that I'm really looking at really to prove a market up. Every market has its own personality, and this is where it's very, very important that you spend the time is just don't go by what I recommend, but have a look at the market yourself, because every market's got its own personality, and you need to make sure the market suits your personality. So first of all, is that market tradable? You want a market that's not too wild. Some of the pairs, the forex pairs, can really move and go crazy, so you just want to look at the different markets so it suits your personality. Do you have a healthy daily volume? Well, of course, on the yen and the euro here with the currency futures, you've got plenty of volume. Do they trend really well? Absolutely. You've got some great trends basically every day. And the next thing is, do my patterns appear, or do your setups? I'm a pattern trader. Traders, I'm mainly I'm a momentum trader. Yes, I'll take CT trades, counter trend trades, with trend trades, but they're all pattern based, and basically that makes my trading 99, or actually that's not true, 95% mechanical. There's still some things such as, are we in a congestion zone, and things like that you do need to consider. That comes down to discretion or the skill set of a trader, but they're all skills that you can learn. But let's quickly now look at this is a 7 range that I use for my anchor, but let's just go and have a look at a tick. Now the chart I like on the euro currency, I like an 89 tick. So if we go and have a look at the 89 tick, ignore these well, you can see there very well. Let me just put my super scalper on there, race super scalper, which is just another indicator we have. All right, so we can see here since the market opened up, let's just go to the market open today. All right, congestion, you had a few scalps there, but you can see here that what you had was a descending triangle. Very, so with the descending triangle, you get it's coiling, the pressure's building, you're going to get a breakout. We actually had one to the long side there, then you had a lower high, you've got then your 89, you got your 89, you then had your 34. Let me just pull this over for you. You had a 34, sorry, an 89, 34, a 34, a 34, you had an 89. So basically, just with your trend trades, you would have actually, if you're targeting $200 to $300 per contract, you would have wrapped your trading up just in this trend today. So for those that are early risers in the US, or those that are early risers particularly in the UK and the European market, these offer some great moves, some really good moves, and I feel they're a lot better. It's a lot better than trading the standard forex market. And what we'll see now as the London session opens, we'll really start to see the liquidity pick up. We'll run, as I mentioned, now actually there's been 28,000 contracts trade today, so we'll really start to see a lot more market moves. And as we head in to 8 a.m. onwards, which is New York, which is what's that, 6, that's another 4 hours from now, 10 p.m. my time, when I actually open up the trading room, we'll really see the volume pick up there. So traders, let's just give you a very quick rundown. So it's a fantastic market, there's great liquidity. If you're looking at the rule of 2, really you can't go wrong with the euro dollar and the yen. It's just really good market. So last of all, as we sign off, if you're not a member, or if you haven't subscribed to my channel, first of all, please do go to my website, request my ebooks for $197. You get all of my cheat sheets, hundreds of videos. Really, I won't go into all the benefits of a member, but it's once only. The only upsell, if you choose, is to join my training room, which is only $97 a month, 12 hours of live training a week. Incredible value. So traders, thank you very much for your time, and I hope you picked up a few ideas.